Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news. The threat of the Chinese economic slowdown hangs over the global economy, and now they're staring at imminent deflation. But first, we should note there was a right shift in the political mood evident in the weekend voting in both Australia and New Zealand. There's also a key election going on in Poland that is worthy of our attention. Locally, early celebrations by the winning parties may be followed by nervousness as the late and overseas votes get counted and may herald complex coalition negotiations. Coming up this week, China will grab attention with its third quarter GDP growth rate, retail sales, industrial production, fixed asset investment, the jobless rate and house price index. Over the weekend, Chinese consumer prices were unexpectedly unchanged in September from a year ago, missing market forecasts of a 0.2% rise. Meanwhile, their producer prices fell 2.5% in September from a year ago. And exports from China declined by 6.2% from a year ago to $300 billion in September, which was an improvement from the 8.8% drop in August and compares with the market expected 7.6% decrease. This marked the fifth consecutive month of declining exports, but was the least severe in the series. However, the result was underpinned by a very sharp 21% rise to Russia. Exports to normal countries were all very weak. To the US down 9.3%, to the EU down 11.6%, to Japan down 6.4%, and to Australia down more than 17%. This is a sign of the international trading blocs sharply cleaving. And staying in China, the IMF is warning there are heightened spillover risks from the country's property woes. The failures are famous, but there are actually less of them, especially domestic bonds in stress. In India, exports were marginally lower in September and slipped 2.5% from a year ago. India, however, is not a powerhouse exporting force yet, exporting only an eighth of the goods that China does. And there is little indication Indian exports are firing up. The US Treasury 10-year yield starts today little change from Saturday at 4.62%, which is 16 basis points lower than a week ago, however. And the price of gold will start today at $1,933 an ounce. That's up another $5 from Saturday, but is a cumulative rise of a heady 5.7% rise for the week. And oil prices have risen a further 50 US cents to be just on $86.50 a barrel in the US, while the international Brent price is now at $90 a barrel. A week ago, these prices were $82 and $84 respectively. And the Kiwi dollar starts today weak at 58.8 US cents, a down after Saturday's drop as commodity currencies stay out of favour. Recall a week ago this rate was at 60 US cents, so more than a 1 cent fall over the week. Against the Aussie, we're slightly softer at 93.5 cents. Against the euro, we're down to 56 euro cents. That all means our trade weight index starts at just under 69.2, which is down 10 basis points from Saturday and down 70 basis points for the week. Get more news about the New Zealand economy from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.